Hey, everybody, welcome back to the Four Star Podcast. Today we have a special interview, and I want to tell everybody we have a new advisor who joined Four Star, and we're proud that he is with us now at Four Star in the Reno, Nevada office. But I would say he's got quite a history and quite a story to tell. A seriously experienced advisor, former branch manager of A.G. Edwards, a serious writer, and a media personality. So let's all welcome to the podcast, Mr. Ken Roberts. Ken, welcome to the Four Star Podcast.
Thanks, Brian. It's a pleasure to be here.
Great to have you. And you come with a lot of knowledge, a lot of experience before coming to Four Star, and lots of notoriety in the writing world. So Ken, tell us a little bit about your career. You started. You were at A.G. Edwards, right, as a manager, but where did you start?
I started with A.G. Edwards, the first brokerage I worked for. That was in the 1990s.
Okay.
And it was a very good company. I left them before they got taken over by Wachovia, but we had a Reno office that's where I started. And then they decided to open a Truckee office. I worked there for a few years. And then they decided to consolidate that with the Incline Village office up at Lake Tahoe. So I had an office up there for several years, and that was great too. I had a view of the lake out my office window, and
it's a beautiful,
very nice place to work.
Good place to be an advisor, right?
Yeah.
Good.
Pretty much so.
And then of course you were also a writer, and still are a writer, and you published in CBS Market Watch and Seeking Alpha and Street.com, and then also one of the local papers in Reno, right?
Yeah, I've written columns I had a regular weekly column in the Sierra Sun in Truckee for several years, and I'm probably going to get back to that. And I've also written for Northern Nevada Business Weekly in Reno, just periodically, not on a regular schedule, but I've submitted information to them too.
Nice.
Enjoy that.
And then you're probably best known for, you wrote a book, The Tactical Option Investor, published when in like 2017, right? Something like that. Okay. And then you've had the famous Ken's Bulls and Bears report on AM 1060 on the America Matters radio network. Tell us about that.
Yeah, the radio show was great. I did a show every Monday and interviewed people and talked about investing, and the real objective of the show was to educate people about investing. We're in a complex world today, so I would interview people who are experts on taxes, investments, authors of investment columns, things like that, and I really enjoyed it. I'm going to get back to it. I'm on a little break right now, but going to get back at it pretty soon.
Great. Yeah, we're looking forward to seeing the new station. I know they made some new changes and everything, but you'll be back on AM 1060, right?
Right.
Great. Well, we'll look forward to that. And you've had quite a list of guests on that radio show, haven't you?
Yeah, had some good, really interviewed some wonderful people over the years. Paul Merriman was a frequent guest, and he has a website that provides free investment advice for people and education. It's very good.
And then
Dr. Bob Barone was on frequently, and always enjoy interviewing him and his outlook on the economy, the macro economy.
And for our podcast listeners, Dr. Bob Barone is a columnist for Forbes magazine. He is the former chairman of the board of the Federal Home Loan Bank of San Francisco, and member of many boards, and very prominent investor around the country, and certainly in the Nevada and California market. So he's a regular guest on your show too, isn't he, Ken?
Yes.
Yeah. And he also, he and Josh are a leading team in the Four Star office in Reno. So we're proud to be associated with them. And then you also had some celebrities on in the sports world too, like Frank Hawkins, right?
Yeah, occasionally. Yeah, Frank was a guest a few times, and he played football at UNR. He went on to play for the Raiders. And we talked actually when cannabis was getting legalized. We talked about that as an investment. Now there are publicly traded stocks in the cannabis industry and talks of it becoming nationally legal. So it might be an area for people to look at. There could be growth in that area depending on regulations. It's worth following. So yeah, I interviewed him about that.
Yeah, pot's legal in many states now,
Right.
and so you smell it. You used to smell that smell, and it felt illegal. And now it's everywhere. You know.
Pretty much. Yeah.
Oh,
Interesting.
interesting. Well, Ken, when it's great stuff, and we're looking forward to seeing all the new media product coming out. And we did talk earlier about your view of risk management, and I thought maybe we talk a little bit about that for a minute. What do you see as far as what investors need to do to manage their portfolio and their risk?
That's a good conversation. That's something that people, obviously over time, the stock market is the best place for your money. But people need to be aware of the patterns of volatility. It goes from cycles of low volatility and climbing to high volatility, and drops can be very rapid. We've been through that. We're almost on the 20-year anniversary of the 9/11 attacks. And I was at the Truckee A.G. Edwards office that day, in the office, watching the plane go into the World Trade Center, and the stock market closed. And of course, a big drop after that. Events like that can happen and are totally unpredictable. Investors need to be in for the long term, know that it's a long-term investment and long-term strategy, and that there will be cycles of high volatility that are emotionally very uncomfortable.
They can be, for sure.
Mhm.
We went through the dot-com bubble, and then the housing bubble of 2008. So what do you think about this current market, Ken? Are we running a worldwide debt crisis now that could turn into a big bubble?
Well, yeah, that's something, recessions are usually accompanied by bear markets, and we'll have a recession again at some point. I don't know when it's going to be. But this is one of the longest running bull markets in history. It's done very good for most people. So sure, it's not a bad idea to look at your personal situation and perhaps think, should I be more defensive or not? What's your age? What's your income, your net worth, your risk tolerance? And, be aware of that. And there are tools that can be used to lower risk. Diversification is one of the basic tools, but make sure you're not all loaded up in one stock or maybe one sector. Spread it out, some international exposure. There are definitely things that can be done. You consult with a competent advisor. That's
Nice. Well, and you talked earlier a lot about volatility. How do you manage the volatility? We haven't seen much of that this year, but like in the commodity markets, so we've seen some volatility, maybe
right.
some tech stocks. But how do you manage that, Ken? What would you suggest to investors in managing volatility?
Well, part of the diversification process is you can look at stocks or sectors. You can look at their historical volatility and put together a portfolio of investments that have a relatively low correlation to one another. You won't necessarily have an opposite correlation, and correlations won't always stay the same. But some investments have different correlations. So if you're all in the tech sector right now, for example, that is an area that's the growth's been great, but it could become volatile. So you want to spread things out, and with investments that aren't necessarily correlated.
Absolutely. Well, that's great. And you also talked a little bit about the bond market and interest rates earlier, and I wanted to kind of drill in on that for a minute. With interest rates near record lows, and they might be there for a while again, but when do you think they'll go up, and how quickly will they go up, and what do investors do with their bonds when rates go up?
Yeah, that's a good question. I don't think we're in for a quick rise in interest rates. I think the way the economy is, it's going to stay low for a while, but I could be wrong. Inflation could kick off unexpectedly. There's been a lot of stimulus, things like that, and investors can do employ strategies to manage interest rate risk. One of the basic simple ones with bonds is buy individual bonds that have a good credit rating. Depends on your risk tolerance there, but ladder them. So you have some that are short term, some that are intermediate term. Maybe you're getting into some that are long term, but the shorter term ones will mature, and then you can roll them out. If interest rates rise, you can continue rolling the bonds. So there are
New
some
money.
Right. Some basic strategies that can be employed. With laddering bonds, there's a barbell strategy where you put some in long term and some in short term, not much in the middle. And that way you've got some short term that you can roll out. But yeah,
Sure.
definitely things like that. And you can look for bond funds that do that kind of approach too.
Sure. What do you think of floating rate bonds, Ken?
I think exposure to some of them is good, like the basic one, the tips, the Treasury inflation protected bonds. That should be a good piece of a bond portfolio for most, for conservative people.
Because if rates rise, those bond yields will go up too, right? Yeah.
Exactly. Yeah, they're adjusted for inflation. Yeah.
Nice.
And they're backed by the US Treasury. So full faith and credit of the US government.
It's credit. Yeah,
As safe as you can get.
exactly. Now, Ken, in your book, you talked a lot about risk management and hedging with options, right? Can we talk about your book? Let's hear more about that.
Yeah, it's called the Tactical Option Investor. And what it's about is for people that have an idea of what they want to invest in or how they want to invest, what option strategy can be used to do that. So that book's a little more for traders, but it's also kind of for the average investor that wants to use options to produce more income or to perhaps lower risk. Because options, of course, aren't suitable for everyone. They can be risky, but you can use combinations, put options to protect your downside. You can use collars where you sell a call, buy a put to, you limit your upside, but you also protect the downside. You can do that on dividend stocks, for example, try to get some income, but also protect that downside without cost. So there's a lot of strategies in there that are for the average investor that wants to produce some extra income off their portfolio. And with the ETF market today, you can diversify in, commodities, precious metals, bonds, stocks, and collect call premium off them if that's suitable for you.
Right. So options are pretty useful tools if you understand them, right?
Right. There's a disadvantage and an advantage to every option strategy. You need to understand them, but they can be very useful tools for risk management and income production.
Yeah. Interesting. We see these commercials now all the time about, I called Gold Line and I buy gold from Gold Line, and vintage enough and age that we've seen the gold bugs from the 1980s in the markets where all they did was buy gold and it went up and went up and up and up until it didn't, of course. Right. So now, we've seen this market where people are concerned about the financial structure of America. There's a lot of debt and everybody's doing the same thing. Buy gold, buy gold, buy gold, but they're not really buying gold because other things are happening like Bitcoin, right? Mm-hmm. So maybe Bitcoin is taking a little bit of the steam out of precious metals that would normally be rallying in a high debt environment. What do you think of all that, Ken? And what do you think of Bitcoin?
It's very interesting. And, of course, it's performed very well. And a lot of people want a currency that's not managed by a central government. Mm-hmm. So I think it's here to stay. The average investor can get exposure through exchange traded funds if it's suitable for them. And it's a way to diversify and have exposure to that area. So it's certainly worth considering. Anything that diversifies and produces a good return over time is worth considering if it's appropriate for you, of course.
Yeah. So how much should, like if somebody was to, take a portfolio, how much should they invest in things like gold or Bitcoin or things like that? Large amounts, small amounts?
I think small. Yeah. I mean, it depends, there's the old 60-40, things like that, 60% stock, 40% bond, but you start, some commodities, have exposure to gold, oil, things like that, maybe 5-10%, Bitcoin, 5-10%, things like, and diversify. That can work very well.
At lower levels like that. Okay. That's good. That's good. Well, good. Well, you knew that, I do this where at the end of every discussion, I always ask, so what is the big message that we want to send? We're gonna put this podcast out all over the country, all over the world. We've been heard on 6 continents, Ken, but not Antarctica. We're still working on Antarctica. But want to tell the world, what's the big message today? If you had one message you would want to tell all the investing public today on the 10th of September, 2021, what would be that message?
I think the main thing is educate yourself, because the best way to build wealth, I mean, real estate's a good way, your primary residence can build wealth, but the stock market is, over the years, has been the best way to build wealth. And our system today is complicated. Our tax system's complicated. The investment world is complicated. There's new products all the time. Things change. Seek out a good advisor, but educate yourself and take the steps, especially for a younger person, to build that wealth. Or if you're an older person that's built wealth, or maybe a person that's got some unexpected wealth, maybe perhaps an inheritance, or you hit the lottery or that kind of thing, talk to someone and learn how to manage that. Because there's a common thing too, is the people that, win a lottery, or even professional athletes that have these very high incomes, they don't do well over time. They have a history of not doing well over time because bad investment decisions or overspending, things like that. So it's education, seek out good advice and educate yourself.
Do you do financial planning, Ken, as well for investors? Do you work on programs like that?
No, I don't do much of that. I focus more on the management. My primary is probably income looking investors that like income, but dividend paying stocks and writing covered calls, getting some call premium plus the dividends and trying to get good yield that way. That's probably my main focus.
That's a great idea. Great idea. Well, I think the idea of building generational wealth is important, and how investors should really make a plan like as early as they can. We talked earlier about, should teenagers and 20-somethings, should they invest? And, if they can, maybe they should, huh?
Sure. Even a small amount, if you're a company, say you're in your 20s, your company has a 401k, maximize that, get as much as you can into that, get it into the stock market, let it grow.
Excellent.
Especially if the company will do a match, you have to take advantage of that. It's like free money.
Absolutely.
Maximum if they're doing a match.
Absolutely. It's a great way to build wealth for your family long term. Well, that's great. Well, Ken, it's been an honor, and we're thrilled that you're with us. You've been with Forestar a little while already. We just wanted to do an interview as we head into the fall here, so folks could get to know you. And we're going to look forward to the radio show as it comes back on the air and you get back engaged in that. So we're pretty excited about that, and maybe we'll have a Forestar person be a guest on your radio show. That would be fun too.
That'd be great.
That'd be great. Well, yeah. Great. We'll leave it there, Ken, and thanks for being with us today on the Forestar podcast, and welcome to Forestar. All right.
Great talking to you. Enjoyed it.
Great talking. All right. Take care. Bye.